Hello, everyone. So we know that monetary policy tends to be rather topical in South Africa. So we just wanted to come with this video and just explain what monetary policy makers consider when they adjust interest rates, right? So you go to the South African Reserve Bank's website, you go under publications, and then you go into the MPC statements. You will see alongside the statement, they also publish a forecast. And that forecast will also include a repo rate path, right? This repo rate path is not something that the MPC has to stick to. It's just a way for them to tell the story around this is how we expect the economy to evolve, and in line with this, this is how interest rates would then be adjusted, or this is how interest rates would also evolve, right? But that is just a forecast, and it's just a way to tell the story around expectations on the economy. But let's get into that forecast and what drives it, right? What is fed into that we call a Taylor rule, right? And that's just a systematic way of thinking about what matters for monetary policy implementation, or even you could argue that it is a reflection of the MPC's reaction function, right? Which does not necessarily mean that it's the same or consistent every single round, because the MPC also, as experts, can decide that something carries more weight in one period versus another. But this is the systematic way of thinking about it. So you would see in the Taylor rule equation, for example, that it is not just inflation that matters, right? Growth also matters, and growth is also considered when making, policy decisions or even interest rate considerations. Number one, you will see there, the MPC considers the deviation of their inflation forecast, because monetary policy is forward-looking. The inflation forecast nearly 1 year ahead, and how much it will still deviate from the target, which is currently 3%. If the deviation is positive, so inflation is higher than the target, then that would put upward pressure on interest rates. If the deviation is negative, that would put downward pressure on interest rates. Then they care about the output gap, right? Output gap being negative means there's slack in the economy, but a positive output gap means that the economy could be starting to show you a little bit of, accelerated activity, pricing pressure, so could put upward pressure on inflation. So that's how they think about, output. And that output gap is determined by, where growth is versus the potential for the economy to grow, right? So these are very big topics that we can get into in other videos. But for the sake of keeping this video succinct, we will consider the fact that they do consider where growth is and where, the economy is in terms of or relative rather to its potential. Then they also consider, which is a new addition, they consider the growth gap. So is growth accelerating or is growth decelerating? Because that would eventually feed into, activity lifting strong enough to close the output gap, create pricing pressure. So they also do consider accelerations in growth or decelerations in growth, and that would feed into the repo rate path as well. The other important thing that they consider is what we call the neutral interest rate. And the neutral interest rate, like potential growth, is not observed, right? So we'll get into these unobserved variables. So they are purely estimates. But you will see that the neutral interest rate is basically the rate that prevails when the economy is in balance, right? So when inflation is at its target and growth is in line with the potential to grow, right? So you could also think about it as the interest rate that is neutral on the economy. It's when monetary policy is neither accommodative or restrictive, right? And that's very important to consider, what is necessary to draw in capital, for example, incentivize investments while at the same time not generating a very excessive activity to the point that it is inflationary. So there's a few of these topics that are included in terms of monetary policy considerations, and we'll get a little bit deeper into them as we go along. Hope this helps.